I call this particular adventure places that are hard to get to. So if you're interested in where these two places are and you're up for it, put on your hiking boots and come on along with us as we all continue our search together for California's gold.
This morning, the firestorm officials had feared becoming a reality, with a third out-of-control wildfire exploding overnight in the Los Angeles area.
At the end of the day, I mean, who's ready for something like this?
About 9.5 minutes ago, the significant story of Bitcoin topping 100,000 for the first time ever.
Well, the state of California seems to be setting the pace when it comes to economic growth. New figures showing the state is now the fourth largest growing economy in the world, surpassing Japan.
Yeah, all right, welcome back, everybody. My name is Freddie J, and this is episode 2 of the Crypto Cabin podcast. All right, let's get us caught up quickly. First off, shout out to Huel. 2 places I'm trying to get us to in this episode. Property ownership and financial sovereignty. Here in California's gold. All right, so there's a little bit of time compression, and you're going to have to play along here. See, I recorded episode 1 like over 1.5 years ago. And when our contractor gave us the bid for our dream cabin in the mountains, we were way off. 6 figures off. Now, part of it's our own fault. We budgeted a certain amount per square foot for about 1,200 square feet. We wound up developing 1,800 square feet. Place had 2 decks, 2 balconies. I was looking at saunas. Don't forget the hot tub. 20 grand to turn on the water, which seemed outrageous when we got the bid a couple years ago. But being that it was just a few weeks ago, I was watching California burn. Makes a little more sense. Still seems kind of high. By the time you add the permits, the furniture, the appliances, I would say to build in California, you better have $1 million cash, at least.
Oh, hell no!
No, really. Yeah. And at the time, I had the brilliant idea not just to invest in Bitcoin, but I had to invest in Bitcoin mining, which at the time we got the bid, which was sometime in 2023, a couple of years ago, Bitcoin was hovering around $25,000 maybe. So I'd ridden it all the way down. But hey, Odell, thank you for the advice. I stayed humble and stacked sats. Seemed to work out okay. But the Bitcoin mining, I had put a huge chunk of money up front and not dollar cost average, was down. I mean, some of it was down 90%. Now, I got a couple of episodes in the can for Bitcoin mining, and I'm trying to secure a guest because it's incredibly complicated business. There was some companies who washed out on the last bull run, some who made it back up, like Core Scientific, and I'm still irresponsibly exposed to the Bitcoin mining industry right now. Still have a decent-sized chunk of my net worth riding on that. So I think now would be as good a time as any to remind you, this show, not financial advice. I could give you some advice regarding the ins and outs of West LA real estate market analysis, how to use AI to manage, imagine, and find a good deal in the real estate market, but not financial advice. Do your own research. But they say bear markets are for building. There definitely was a bear market for Bitcoin just a short minute ago. It's hard to believe in the beginning of May as Bitcoin hovers at around 95K, but it was only a couple of years ago that it had ridden down from whatever that last top was, 68, 61 to 17. And while I don't know if you could call it a bear market, the LA real estate market, it does seem a bit sluggish. Prices have softened at least a tiny bit, and mortgage applications nationally are definitely down. I just saw something on the old Twitter or X or whatever it's called, that mortgage applications for this time of year are down about 30 to 40%. That was a national number. I'm not sure where it stands in Los Angeles. I'd have to do some more digging. But point is, I'm building. People get into real estate for building. People get into Bitcoin because they like building. Bitcoiners built the most secure, robust computer network in the history of the world, and may have laid the groundwork for the future of our financial system. And I like to build. What have I built? Well, built a website at freddieJhomes.com. I got licensed. I signed with a broker. I have completed a program at Pepperdine University's Davenport Institute on local government and civics. I've built both my knowledge of and a position in Bitcoin. And while I was unable to build on our land in Big Bear, we own an absolutely beautiful piece of property in the Whispering Forest section of Big Bear City. You can check it out over at FreddieJHomes.com. Click on the mountains. And I've added an asset to our family's portfolio. And actually still hope to build. My wife wants me to sell it. I think we may wind up building at some point. We'll see. I've incorporated the latest digital and AI tools to make my website, my logo, my business, and my research and analytics on real estate markets a tremendous part of a new real estate business. And now it's time to put it to work. As a podcaster, that's exactly what I'm doing right this second in your ears. As a realtor, it's time. If you are buying, selling, or leasing anywhere in Los Angeles, you need to give me a call. Whether it's the new MLS listing agreements, the new disclosures on condo balcony inspections, or the grim realities of Los Angeles area mandates for defensible space and fire codes. I have spent the last 3 years studying real estate in Los Angeles. Put me to work. And so a handful of years studying real estate, and at least that many down the Bitcoin rabbit hole, and I still can't shake the feeling that Bitcoin and real estate have got to come together in some holy union of sorts. In the reboot of not this podcast, but the What Bitcoin Did podcast, shout out Peter and Danny Boy, I came across Junseth's episode recently, and he pointed this out.
There are these needs that Bitcoin sort of puts on display for the world that there are no products for. So, like housing, you're worth $30 million. You have no income last year. You're a perfect candidate for a mortgage because you can pay it.
Yeah.
So, like, the bank should be happy to give you money. So you go to the bank, you're like, okay, I want a mortgage. And they're like, okay, show us your financial statements. And you're like, I have none. But here's my $30 million portfolio and I have zero debt. Okay, but what do you make per year? No, I have $30 million. Okay, but what do you make per year?
Yeah.
Nothing. Okay, but we can't give you a mortgage then. Well, why? Because you don't make anything. Okay, so like, I think about that kind of thing.
Is that what banks do?
Yes, they do. Absolutely, they do that. And it's crazy. Whereas I think about it, I was like, why isn't there a product where I can be like, look, the home's worth $700,000.
Yeah.
Let me take $40 million of my money. And I'll take $700,000 of it. I'll put it in an escrow fund. You allow me to continue to like invest it. If it goes under the amount the house is worth or whatever the mortgage is worth, I'll top it off.
Yeah.
And so you can take that money whenever you want and I'll take the house. Or you can take the house whenever you want and I'll take the money. Right? We're even Steven. Anytime it goes down, you give me 10 days to fill it. I'll put money in it, right? Something like that, where you could like basically put money away into an escrow account. You would still be able to invest it. You'd still be able to keep your Bitcoin. And you would also be able to like collateralize a loan against a mortgage. Like, I don't see why that's not a thing that doesn't, or that exists.
Yeah,
like,
I'm sure that's not a thing.
It's not a thing.
Now, Junseth over at the good old WBD podcast is talking about collateralization, which seems fairly straightforward. I mean, especially as it stabilizes and continues to go up in value, it's incredibly liquid Bitcoin. You can sell it 24/7, and it seems like almost a better form of collateralization than the loan-to-value ratios of the house itself to some degree. It seems like an obvious market need that has to be filled by the legacy financial system, by banks, essentially, and lenders. And you could collateralize against anything. The home itself has value, and theoretically, if you have a collection of Ferraris worth $20 million, you could borrow against that. But the reality is, if you need to come up with capital to service your loan, there is nothing in the world that's better than Bitcoin. It trades 24/7. Try getting rid of a house quickly when you need money, or a Ferrari for that matter. Junseth over there is probably worth $20, $30, $40 million, and somebody's going to get there with a Bitcoin-based business. But what really got me thinking was the Giga Chad and someone who's probably worth several $billion in Michael Saylor. Like many Bitcoiners, I have a certain amount of reverence and look up to Mr. Saylor. I am a strategy shareholder. I found myself amongst the unwashed masses last week and was one of I think it was like 200,000 people who tuned in to his earnings conference call, where he laid out a seemingly brilliant plan to purchase another $40 to $80 billion worth of Bitcoin using every financial instrument ever imagined, like a Bitcoin gangster.
Oh yeah. Oh hell yeah.
But that seemingly was not enough. I found myself back for more yesterday, where I gleefully tuned into the keynote speech of Strategy's opening day of Bitcoin for Business, or I think technically it's Bitcoin for Corporations, which took on a special meaning, especially since Michael gave a 3 to 5 minute pitch to the board of a little company called Microsoft, which the board wound up rejecting, and shareholders voted down by more than 95%. It had less than 1% approval rating, just to do a study to see the feasibility of a Bitcoin treasury. It's just unbelievable. But so he's given this whole speech about how corporations do everything they can to give away their money. They give dividends. They buy their stock. They rebuy the stock. They can't keep up with the S&P. It's wild. It's sort of almost right at Microsoft. And then along the way, about 15, 20 minutes in, he starts to explain the different kinds of money.
The conventional thinker will tell you money is a medium of exchange, a unit account, a store of value, and they'll stop and they'll act like they just solved the problem. It's like, this is why you don't want to teach people to brainlessly repeat stuff that they learned in school. Well, the truth of the matter is, when you think about it, you realize that high frequency money versus low frequency money varies. So if I want to spend the money for the next 4 weeks, I'm going to use the peso in Argentina. It's a super, super high frequency money. If I want to hold the money for 4 weeks to 4 years, I'll use the dollar. It's the world's reserve currency. Those are mediums of exchange in the world. But if I want to hold the money for a decade to 40 years, I'm going to use an asset like real estate, like gold, like equity. And if I want to hold the money for 10 years to 100 years, I better have a very durable asset, one that's going to last 100 years. So when you put money on that spectrum, you can see that on one side is capital. It's long-term store of value money that I'm going to give to my children's children. And on the other side is currency. It's high-frequency, convenient medium of exchange money. And once you get that, you realize there's a hierarchy of capital assets. Bitcoin is better gold than gold. Bitcoin is better property than physical property. Bitcoin is a better tech equity investment than any company equity. Bitcoin is the apex capital asset.
Now let me repeat that so nobody gets confused. The apex capital asset, from the mouth of Michael Saylor. Now this is where things get interesting. Take a minute, stop, and ask a very simple question. What are the most capital-intensive transactions that the average person will come across in their lifetime? And the answer you'll get most often: the purchase of or sale of their home. Followed closely by home renovations, I might add, which is also pretty capital-intensive. What about commercial real estate? Think it takes a lot of capital to develop, to build buildings, complexes, stadiums? You're telling me that Bitcoin is the apex capital asset and it doesn't work its way directly into the mortgage market, into lending, into real estate development, commercial lending? It's impossible. It's the most capital intensive industry we have is real estate. If it's the apex capital by nature, it has to work its way into the real estate world. I can't quite figure out how, and I will say the incentives on the traditional lending side are very much aligned against it because of their access to the Fed, the central bank's overnight window, and the ability to extend credit and sort of create liquidity on demand. But there's nothing more capital intensive for the average person, and for that matter, commercial interests, than real estate, lending, development, and renovation. They're all very capital intensive ventures, shall we say. If the most successful businessman of the past half century tells me Bitcoin is the apex capital asset, in my mind, it has to find its way into real estate. Now, how exactly? Well, that's the mystery. That's the reason for this podcast. That's the $1 million question. A little earlier in Saylor's presentation, he kind of goes through how the Magnificent Seven outperformed everyone. And really, without them, the S&P and a lot of the stock market gains don't exist, which is kind of kooky. But he weaves AI in there somehow and starts explaining how right now it's serving the big companies and not the little guy, and goes on to say this.
AI It's not that it's a bad idea. It's a good idea. AI is a necessary condition for success. You won't stay in business a decade from now if you haven't embraced it. There's no doubt. It's a necessary condition. It's just not sufficient. It is necessary, but not sufficient. You have to embrace it, but it's not going to save you. Bitcoin is the solution.
Now, full disclosure, I have taken Saylor a bit out of context in the sense that the solution he's talking about has nothing to do with mortgages or lending or real estate. He is talking about solving the problem of corporations frittering away their treasuries, of wasting their hard-earned cash. I get there's maybe a bunch of you out there going, oh, poor corporations can't keep their money. But we're talking about giant sums here, and without corporations, there are no iPhones or artificial hearts. I mean, it's not all good or bad. They create incredible things that drive societies forward. And again, having nothing to do with real estate, what Saylor is talking about is Bitcoin solving a problem of wealth preservation. Very strongly, I don't know if you would say correlated, but connected to real estate. I mean, that's how most Americans retain wealth, gain wealth. Now I'm going to go back one more time to where I started this little Saylor section of the podcast. The apex capital asset. And it seems to me, over the next several decades, if you want to survive in a capital-intensive industry, it would behoove you to own, incorporate, and utilize the apex capital asset. And so what I'm pretty sure he's saying here is while AI will be necessary for survival, capitalizing in Bitcoin is going to put you over the top, especially if you move now.
And why? Well, because very few people agree. Because most people don't think it's the solution to the problem. Few agree that you should use Bitcoin to capitalize your business. Now, you don't have to take my word for it. You can literally go out on the street. You can ask 100 wealthy, well-educated people. Go ask any, business school professor. The majority will say, it sounds risky, not a good idea, increases the risk. You go ask the same people, should I use AI in my startup? They're like, absolutely. Okay. The consensus technology is digital intelligence. The paradigm shifting technology is digital capital. Digital capital will save your company because everybody else doesn't understand it, because the mainstream has not yet embraced it. You get to be first.
I wonder, when he writes these speeches, does he just picture himself dropping the mic and walking off stage to adoring fans? I mean, mic drop moment. Mic drop moment. The consensus technology is digital intelligence. The paradigm shifting technology is digital capital. It's brilliant. And so now, the question is, who's first to the market with Bitcoin-backed mortgages? Who's first to the market with Bitcoin-bundled mortgages? Who's first to the market for Bitcoin development and commercial real estate? Who's first? I think Michael Saylor's going to be first, but right now nobody's first. There are no companies like that. But there will be soon. All right, so that's a wrap for this week's episode. Thank you so much for tuning in. Head on over to FreddieJHomes.com for any Los Angeles-related real estate needs. You can see the blog, the feed for the podcast, and we will be releasing a neighborhood video next week on our YouTube page and the site. First one's on Culver City, my hometown. You can find me on the old Twitter or X, whatever you like to call it, on @CryptoCabinPod. We'll see you next time. Thanks again. Stay humble, keep stacking.